like to welcome you, and I'd also like to thank the Owens Valley Career Development Center for hosting us today. And they have a wonderful facility here, and they've been very generous with snacks. So please, please hit the snack bar over there at the end of the table and enjoy the presentation today. And I'd also like to thank, on behalf of the California State University Bakersfield Small Business Development Center, a number of our partners that were included in promoting today's event, including the Kern County Black Chamber of Commerce, the Kern Economic Development Corporation, and the Greater Bakersfield Chamber of Commerce, among others. So thank you very much for all your work in getting the word out about this important work. And this important work is a great tax credit program through GO-Biz, through the Governor's Office of Economic Development, and offers businesses a great opportunity to establish these tax credits in order to assist them with in their business. If you need any assistance afterwards, either with working on the credits or working on any other phase, contact our office. We do have free one-on-one business consulting with about 15 qualified consultants, and also some of our student leaders are also working on our team as well. So that all being said, I'd like to introduce Scott Dosick. And Scott is the Assistant Deputy Director for the California Competes Program, Tax Credit Program from the state of California. So without any further ado, Scott Dosick.
Hi, good afternoon. Excellent. So here's the agenda for today. By the way, my goal for today is that two things are going to happen. One, I want this to be the most exciting tax credit presentation you've ever listened to. I know that's not setting the bar extraordinarily high. The second thing is when I finish the presentation by saying I'm with the government and I'm here to help, that you don't laugh at that joke and that you do take it seriously. So we'll see how that goes in about 35 minutes. So today's agenda, I'm briefly going to go over a number of credits and incentives that are out there and available statewide, and then leading up to, of course, the best credit of them all, the California Competes Tax Credit, and talk to you about the application deadlines and the process for applying. We're taking a little bit of a high-level view of this program because we've started implementing weekly webinars where we actually walk you through the application screenshot by screenshot, question by question on how to fill it out. So today's workshop is going to be a little shorter than the ones we've done in the past for those of you, Tom, that have seen this in the past, but then we're also offering in these weekly webinars if you want to take a much deeper dive, and then we'll have some time for Q&A at the end. If you do have any questions, please feel free to ask them. They are recording me for a webinar, and so I'll probably end up repeating your question, but also don't be surprised if I say great question, next slide, because we've gotten pretty good at anticipating most of the questions, but not all of them. So if you want to play Stump the Speaker, go ahead. So first, to talk to you a little bit about the Governor's Office of Business and Economic Development. We have a number of different programs, and our primary focus is working with businesses to find ways to grow and expand in California, whether it's our Business Investment Services Unit, CalBiz, which works on site selection issues, and so if companies are looking at relocating in California or relocating, they work with you on those types of activities. Our International Affairs Unit, we have a small business unit, and all they do is all day long work with small businesses to help them get established, grow, and expand in California. A permits unit that will help you, you probably realize California, depending where you are, there's a myriad of permits you might have to get, or you might not even know which permits you need, and once you figure it out, how to go through that process. That permits unit is there to help you to navigate that process. But I'm going to talk to you just now about a couple of other incentives and programs. For those of you that don't know Tom Mendez with the Board of Equalization, Tom is here, and he's got some brochures about this program. Tom and I always laugh because I say I kind of like marketing his program, which is the manufacturing partial sales and use tax exemption, because it's probably one of the easiest, most common sense programs in the state of California. By the way, this entire presentation is downloadable at business.ca.gov. That's, if you look on the last slide of the handout, the URL's there as well before you're writing it down. So if you want to download this, because I almost always see people start taking pictures of certain slides, and then I remember, oh yeah, it's available online. So I know a lot of these slides have a lot of information on them, probably can't see them. So the manufacturing partial sales and use tax exemption administered by the Board of Equalization. If you're buying manufacturing equipment, this exempts you from the state portion of the sales tax, which is currently right around 3.925%. So it doesn't get you, what's the sales tax here now? 7.25. So it doesn't get you out of the full 7.25, but it gets you out of the 3.925. And there's a little more to it, but basically you fill out a one-page form, you bring it to your vendor when you're buying the equipment, and you never pay that 3.925% of the sales tax for qualified manufacturing equipment. Tom's here and can talk to you about it if you have more questions. I know he'll stick around because Tom always sticks around for the Q&A portion. But then we have on the website information and the direct links to the program. There's another similar program, the California Alternative Energy and Advanced Transportation Funding Authority. So it's the government, we call it CATFA, and this is a full exemption that's available for more advanced manufacturing equipment. I'm not going into great detail, but if you're purchasing advanced manufacturing equipment, it's definitely worth looking at, and we have the contact information in your slides as well. The Employment Training Panel is another state agency that basically will cover the cost or reimburse your costs for training your employees, especially to give them opportunities for advancement within your company. So for information about ETP and how that works, you can see some of the information here. It doesn't provide the training itself, but it works with you to cover the cost of you providing the training yourself, or for you to outsource the training to another entity. And so there's information available again at etp.ca.gov. And then the California Infrastructure Bank, or iBank, is also administered out of GO-Biz, and they have a number of different programs. They mostly work with governments to provide funding for large institutional projects, large infrastructure projects, but they also have a couple of small business programs right now, including a small business loan guarantee program and the Jumpstart Loan Program, which provides loans of, I believe, up to about $10,000 for small businesses to help kickstart whatever it is that they want to do. So for more information, please go to ibank.ca.gov. And then for any business question you have, GO-Biz has established the California Business Portal at, ironically enough, businessportal.ca.gov. That is your one-stop shop for any question you have about growing business, doing business in California, anything business related. It's got an incredible database that literally grows every week. And if for some reason the question that you have does not have an answer in the database, you can post your question and a real live person from GO-Biz will get in touch with you to answer your question. So with that, I'm going to jump into the California Competes Tax Credit Program. So the first question, of course, is, so what exactly is California Competes? So Cal Competes is an income tax credit program that was created to incentivize the creation of quality full-time jobs in California to put more Californians back to work full-time. It's an income tax credit. It's not a grant program. It's an income tax credit, so it can be used to offset the income tax that your business pays to the state of California, to the Franchise Tax Board. Not sales and use tax or employment tax, but the income tax that you pay to the Franchise Tax Board. And unlike other credits and incentives you may have seen in the past, this program is not retroactive. It is a prospective credit where, and I'm going to walk you through basically the application process now, where you're going to be competing with other businesses in California. You're making your case why your company should get a tax credit to help make your project a reality here in the state. It's a non-refundable credit, so sorry, if you have more credit than you owe taxes, you don't get a check in the mail, but it does have a 6-year carry-forward provision, meaning any credit you don't use can carry forward for 6 additional years, so 6 subsequent tax returns until you fully utilize the credit. So we do have that flexibility built into the program, and it's tied to achieving contractual milestones. Basically, in your application, you're going to lay out, here's the number of full-time jobs I'm going to create over the next 5 years. Here are the wages I'm going to pay those new employees. Here are the capital investments I'm going to make to support the job creation. And then your contract will have that and say, okay, and here's how much credit you get each year if you hit your milestones. So hopefully that'll make a little more sense as I go through the rest of the application. And then here are the 11 criteria. I'm not going to dive into every bullet on every slide because I think some of you probably want to get home before 6 o'clock this evening. But suffice it to say, these are some of the main criteria that we're looking at when we're evaluating applications for their competitiveness. And first and foremost, it's the number of full-time jobs being created in the state. We're looking at the amount of investment. We're looking at the types of jobs. We're looking at the strategic importance of the jobs. I was in San Luis Obispo this morning and San Jose yesterday, and you know, if you look at San Luis Obispo, San Jose, Bakersfield, right? 3 very different parts of the state. If someone in San Jose was going to say that, hey, we're going to be creating some $30,000, $35,000 a year manufacturing jobs, those aren't going to be exceedingly meaningful in an area like San Jose where the cost of living is extraordinarily high. If someone in Bakersfield or one of the surrounding areas here said they're going to be creating full-time $35,000 a year entry-level manufacturing jobs with benefits, that's going to have a higher appeal rating, you can see, because there are going to be more folks in this vicinity that would be able to take advantage of that. So we do take those regional looks at the jobs that are being created to see where is this credit going to have the greatest impact throughout the state. So for this fiscal year, the state operates on a July 1st to June 30th fiscal year. So the new fiscal year starts July 1st on Saturday, so Happy New Year, everyone. And we're going to have, we're waiting to get our final numbers from DOF. This number should go up from the Department of Finance, but we will have at least $200 million in tax credits to allocate this year. As you can see, no more than 20% can go to any one applicant per year. So the maximum credit request, 20% of $200 million, is $40 million. The minimum credit request is $20,000. So hopefully by the end of this presentation, this workshop, you'll have a better feel for where your credit request should be, somewhere between $20,000 and $40 million. Pretty broad range, right? So we'll help you try and whittle that down. And then 25% is reserved exclusively for small businesses. And as the folks from the SBDC know, and I'm sure anyone who is a small business knows, is it just me or does every single government agency at the local, state, and federal level have a different definition of a small business, right? So Cal Competes is no different. Our definition, and this is in the law, states that a small business is a company that had gross receipts in its prior tax year, and those gross receipts were greater than zero, but less than $2 million. So that's a pretty small business, right? Under $2 million in gross receipts. Are there any small businesses here today that fall in that under $2 million in gross receipts last year? Okay, couple, great. So the other question, I guess, because then when I say that, well, small businesses, under $2 million in gross receipts, I usually see this crestfallen look among the crowd with the people that have $4 or $5, $10 million gross receipts that definitely are not large businesses, but they don't fall into small businesses. So here's the good news. The other 75% is available, and you're not going to need to write this down because I think you're going to be able to remember this. So that other 75% is for any business of any size anywhere in California doing anything. Okay, so now that's not to say that some sectors aren't going to be more competitive than others, because it's going to be easier for them to make a case on how a tax credit is going to influence their business decision or their ability to grow and expand in California, but there are no restrictions going in. So that other 75%, the $150 million this year, is for all businesses in California. So on June 30th, which all of a sudden is Friday, we will be posting a memo on our website with the actual dollar amounts available for each application period, but the tentative amounts are starting July 21st. That'll be our next application period. We're going to have $75 million available, maybe more. January, we'll have another application period, and then our third application period of the fiscal year will start on March 5th. It is a 100% online application at calcompetes.ca.gov. And again, I reference this website, but if you want to download this presentation, we also have a frequently asked questions document, an application guide, and our regulations, a lot of really helpful information, all at business.ca.gov. You can do that whole URL, or you can just click on the Programs tab and select California Competes Tax Credit. If you've applied in the past, or if you apply in one of these rounds and you're not successful, the good news is, because it's a 100% online application, we make it really easy to reapply. You don't have to re-enter all the information every single time you apply. You can hit the copy button, and it'll copy the information from your old application into a new application with some fields that you're going to have to update, just depending on how long ago your application was. It's a 4-phase application process, and I'm going to walk you through that right now. The first phase is a purely quantitative phase where a cost-benefit ratio is created based on 3 factors. The numerator of the ratio is the amount of, and I'm sorry, it's like I only have to do math like 2 or 3 times. This is one of them. The numerator is the amount of tax credit you're requesting. The denominator is the sum of the aggregate employee compensation, which is basically the wages you're going to pay your new full-time employees over the next 5 years. So if you're going to hire somebody, say January of next year, and they're going to make $50,000 a year, those 4 years, that would be $200,000 of aggregate employee compensation. So aggregate employee compensation, the wages you're going to pay your new full-time employees over the 5 years of the contract, and the aggregate investment, which are the investments in real and personal property, the CapEx that you're going to be doing over the next 5 years to support the full-time job creation. So since the numerator is the credit you're requesting, the smaller your ratio, the more competitive your application is going to be. So in phase one, here's what we do. We rank all the applications that come in by their ratio, and we do a running credit request until we get to 200% of the amount of credit available. So this first period where we have 75 million available, 200% is 150 million. So we're going to rank all the applications coming in by their ratio and look at how much credit they're requesting until we hit at least 150 million. If you're within that 0 to 150 million range, you move into phase two. If you're not, you don't move to phase two. Your application is not moving forward, but you can reapply in a future round. However, there are two ways that you can move into phase two other than the ratio. The first is there are some boxes in the application that you can check. One of them is if you're at risk for leaving the state of California or laying off California employees, we want to have an opportunity to work with you to make sure that we can keep those jobs in California and keep your employees employed in California. So if you check the box saying that you're going to be laying off employees or reducing your California workforce, you automatically move into phase two. However, in phase two, you will be asked to sign an affidavit under penalty of perjury that says, yes, I'm really at risk for reducing my California employees. So you don't get to just wave your hand and say, oh yeah, I want to move to phase two, I'm going to check the box. There's a little bit of accountability built into it. Now the second thing is, and this is going to be extremely valuable for many of you here in the Kern County and the surrounding areas, which is if 75% of the new jobs that you're going to create are going to be an area of high poverty or high unemployment. And the definition of high unemployment or high poverty area is a city or county whose unemployment or poverty rate is 150% or more of the statewide average. You don't have to do the math. We do it every application period. We post a notice on our website with the list of cities and counties that qualify, because obviously it changes as the unemployment rate fluctuates statewide. The poverty rates tend to stay a little more constant because the Census Bureau doesn't update them super frequently. So if you fall into one of those cities that's a high unemployment or a high poverty area, you check the box saying, yes, my jobs are going to be in a high unemployment or high poverty area, and you automatically move into phase two regardless of your ratio. And then once you're in phase two, that's when we get to take a more holistic view of your application, look at all of the criteria, not just from a quantitative perspective, but from a qualitative perspective as well, to see what impact is this project really going to have on the state of California and putting people to work. Once you're recommended for a credit award, you will sign a contract with GO-Biz, again, that lays out the specific contractual milestones each year that you would achieve in exchange for the credit based on the information you put into your application. And then the final decision to award the credit lies with the California Competes Tax Credit Committee that has, so at a public meeting, they will decide whether or not to award the credit. And once they do, then you're good to go for the next 5 years. This is an example of what the last page of an agreement looks like. And you can sort of, okay, note to self, the laser pointer doesn't work on a TV screen. But what you can basically see is that each year, oh, you know what I get to do? They were telling me about the Harry Potter wand. So if you could make sparks fly out of this when you do the webinar version, that would be really cool. So this company, Widget Manufacturing, located, let's say Dineba, right? So Widget's going to grow from 5 to 9 full-time employees over the next 5 years. Each year, this is how much they're going to grow, from adding 2 and then a third and then eventually a 4th new full-time employee, making a minimum of $35,000, average of $40,000. When they add that 4th employee, the average goes up to $50,000 for those employees. And these are the investments they're going to make. So basically, the contract says each year, if you do what you said you're going to do, here's how much credit you get to claim on your tax return that year. So if they add 2 full-time employees in the first year that make a minimum of $35,000 and an average of $40,000 a year, then Widget will get to claim a $24,000 credit on its 2017 tax return. You have the full 5 years of the contract to meet any or all of the milestones. Because I don't know about you, but I should talk in front of the microphone, sorry. I don't know about you, but my crystal ball, it's a little murky when I look more than 6 months out. I'm not real good at projecting where things are going to be 6 months from now, let alone 5 years from now. So if you miss a milestone, let's say Widget hires those 2 people in the first year, but that 3rd year, or the 2nd year of the agreement, they don't hire that 3rd employee. They're not able to find the right fit. So they miss their milestone for 2018. They don't get to claim that $24,000 credit But at the beginning of 2019, they hire the one they were supposed to hire the previous year, and they hire the one they're supposed to hire for 2019, and they hit the minimum of 35,000, now an average of 50,000 for all the new employees, and they've done 175,000 of investment. Now in 2018, they can claim the 24,000 from 2017 and the 24,000 from 2018. So they get a $48,000 credit on their 2018 tax return. I'm enjoying this just a little too much. I'm going to put it away now. So, and if they don't have $48,000 of tax liability, they don't get a refund, but this is where the carryover kicks in. They earned that $48,000 in 2018. It's got a 6-year carry forward. That means they can carry forward that $48,000 all the way till their 2024 tax return until it's fully utilized. Does that make sense? Okay. And then once a company is awarded a credit and the committee approves it, we post the information on our website. You can see here the name of the company, where they're located, the type of industry, the amount of credit that they're going to get, the amount of investments, and the net increase of full-time employees. So here's the neat thing. We talk about this program being a model of both accountability and transparency. We have awarded 775 companies tax credits in the 3.5 years this program's been up and running. Every single one of those agreements is available on our website. You can go to the awardee list. You can see all this information and those blue hyperlinks. You click on them, you can see the actual 8-page contract that every single company has signed and exactly what they committed to do in exchange for the credit. And then the Franchise Tax Board has the oversight responsibility for this program. If you're a non-small business, the FTB at some point will come in and do a books and records review. It's basically validating, did you do what you said you were going to do, right? So if you said you were going to hire a certain number of people, they're going to come in, they're going to look at your payroll records and see, did you hire the people you said at the wages you said you were going to do? If you said you were going to be buying or leasing new equipment or a facility, they're going to look at your receipts. They're going to, basically evidence that you really did what you said you were going to do. So now I'm going to do sort of a high-level how to apply for CalCompetes with the reminder that if you want the deeper dive with a great deal of technical assistance, please attend one of our weekly Wednesday morning webinars. So first, I found this out the hard way. The good news is I'm bilingual. I worked for the federal and state government, so I speak both dialects of government. I'm not quite fluent in local government yet, but I'm working on it, night classes. So it's really helpful to be on the same page and make sure we're all using the same words. Sometimes we use words and they don't mean the same things to other people. So like small business, I already told you, the less than 2 million in gross receipts. For the first year we had this program, people kept calling in saying, the application's asking me to describe my project. What's a project? Project is simply whatever it is that you're doing that's going to result in the creation of new full-time jobs. So it could be, I assume everyone's heard of Tesla. Right? So Tesla got a $15 million credit to create over 5,000 jobs in the state of California to design, build, manufacture the new Model 3, the longer range, more affordable electric car. That's an easy to understand project, right? They're buying equipment, they're building factories, they're doing all the stuff you need to do to make an electric car and sell it in California. But if you're a small business, say, let's say you're you provide repair services for heavy-duty trucks and equipment, right? Your project is, well, I have to turn away customers because I'm out of capacity. So I want to add, an extra repair bay and get some repair equipment and hire a couple of new employees, some mechanics to work on it, probably need some additional help in the back office too. That's your project. It's whatever it is that you're going to do that's going to result in the creation of new full-time jobs in the state of California. We measure your full-time employment compared to your base year. Your base year is simply your most recently completed tax year. I'm assuming most companies are calendar year taxpayers, January 1st to December 31st. Is anyone a fiscal filer? Okay. What's your fiscal year? 8/31. Okay. So please remember, I'm going to talk about calendar year numbers because it just makes it easier. But just remember, for you, if you apply this year, the application's due August 21st. So you're still going to be in your 2016 tax year. So your base year will be 2015 because that was your most recently completed tax year at the time of the application, even though you're only going to have 10 days left in your 2015 tax year or 2016 tax year because you'll start your 2017 tax year on you say 8/1? Oh, 891, right? So on 9/1 you'll start your new tax year, your 2017 tax year. So for everyone else, your most recently completed tax year, your base year, is 2016. So all the information we're going to ask you for for your base year is for 2016. When we talk about full-time employees, it's only your W-2 full-time employees. 1099 contractors do not count. It's your W-2 full-time employees. And a full-time employee is defined as someone that works at least an average of 35 hours per week. They don't have to work 35 hours a week every week, as long as they work at least an average of 35 hours a week while they're employed by your company. And we measure the full-time employment on an annual full-time equivalent basis. This is a way of accounting for full-time employees that don't work a whole year. Wouldn't it be nice if all your employees started on January 1st and they all retired or resigned on December 31st? It would make the accounting so much easier. It doesn't work that way, right? So if you were to hire somebody this year on July 1st, right? They're a full-time employee, they're going to work 40 hours a week. They would count as roughly half of an annual full-time equivalent in 2017 because they're going to work half the year. But if they stay on the payroll in 2018, they're going to become a full annual full-time equivalent as long as they stay on the payroll in all of 2018. If you had someone retire this year on March 31st, they're going to be roughly a quarter of an annual full-time equivalent on your payroll this year, but they would have been a full 1.0 in your base year if they were on the payroll in all of 2016. Are there any questions about that, or does that make sense? Okay, that's probably the most complex aspect of the application, is understanding how to, because we're not looking at part-time employees, we're not adding multiple part-time positions, it's only full-time employees that work at least 35 hours a week on average, but it's accounting for the ones that didn't work, or won't work more than a full year in any given year. And then when we talk about the wages for calculating the aggregate employee compensation, just the straight W-2 wage, no bonuses, tips, commissions, stock options, no benefits, just the straight base wage. On the investment side, it's real or personal property that you're paying for, purchasing or leasing, and placing into service in California after the application deadline. So with the current application period starting July 24th and closing on August 21st, investments will only count if they're made after August 21st for this current year. So if you're in the middle of a 10-year lease, those ongoing lease payments aren't going to count because you've already entered into that agreement. But if at some point after August 21st, if you're going to enter into a new lease or buy a new facility or buy new equipment, lease new equipment, new vehicles, that would count. So real property, building and lands, personal property, things like cars, computers. Think about things that you would typically depreciate but not expense on your tax return. So a photocopier would count, has a useful lifespan of more than a year, but the toner and copy paper would not count. You had a question, sir?
Yes. So I'm in the process of finishing up my lease, buying a building in the second one here in Bakersfield. So that means that if I close after August, it would count. If I, because I'm set to close the 30th of this month, it wouldn't, like for this purpose, it wouldn't work, right?
Right, so the question has to do with purchasing a new building, and if you purchase it and close escrow prior to the close of the application period. So you are correct, it would not count for purposes of the investment for the application, but I would remind you that California Competes is first and foremost a full-time job creation program, and we're looking at the jobs you're creating and the investments you're making over the next 5 years. So if you're still projecting full-time job growth over the next 5 years, it's still worth going in there, because even if you were to hold off on closing escrow, it's still, we're always looking at what role is the credit playing in incentivizing the investments and the job creation. If the bulk of the investments in job creation are in the last 6 months of the current year, obviously the credit's not a huge factor in that, because most companies are making business decisions of that magnitude months or years in advance as they're building up to it. You're not going to, so it's hard to say that the credit would be a major factor in a business decision that you've pretty much already made for a credit that you may or may not get. Does that make sense? So, very good questions, thank you. So as you get ready to fill out the application, you're going to need to have your payroll records for your most recently completed tax year, your base year, so that you can answer the employee questions about the number of full-time employees that you had in your base year. Right? You're also going to want to have something akin to a 5-year business plan, because you've heard me say 5 years now a number of times. We're looking at your job growth and your investment over the next 5 years. You're going to be able to need to tell us how many people you're going to hire, what are their minimum and average starting salaries going to be, what kind of capital investments are you going to be making. And this is where having SBDC here in town is a great resource, because one of the things the SBDC does is they help, and correct me if I'm wrong, but pretty much every SBDC I've talked to helps provide business planning services, including the development of a business plan. So it might be worthwhile over the next 3 weeks, if you get a chance, sit down with the SBDC, get their help in coming up with your 5-year business plan. If you have at least a halfway thought out business plan, this is not a super difficult application. If you don't, it's an incredibly difficult application, because these questions really rely on you having some thought of what your growth is going to look like over the next 5 years. So the first thing you do in order to create an application is you have to sign up and create an account on our website at calcompetes.ca.gov. I'm assuming everybody's been on the internet a couple of times and has created an account for something. It's the same thing. You go online, you put in your name, phone number, email, you click save, bam, you have an account. The next step is, so here's the really good news. You don't have to memorize another password, because we don't use passwords. We use an email key system. So every time you want to log into the system, you type your email address and click email key. You get an email with a 6-digit number. It's a different number every time, and you have to request this key via the email request every time you log into the application. So you type in your email, usually within a minute or two, you get the email with the key, you go into the system, you enter your key, and then you're in the system. From here, you can create a new application or work on existing applications. You'll notice that each section is marked red right now, not started. As you go through the application, if you hit the save button, these red boxes will turn yellow and say in progress. If you hit complete, they'll turn green and they'll say, well, complete. You can't hit the submit button. You see the submit button in the bottom left corner is not lit up. You cannot hit the submit button until every section is green and complete. So we try and make it as difficult as possible for you to submit an incomplete application. The options button on the bottom of the screen has some features you might want to check out, including the copy feature if you want to copy an old application into a new one, and also the ability to add additional users to your application once they've created an account in the system. The report button will generate a PDF report of your whole application. So if you want someone to review your application, but you don't want to give them the ability to go in and make changes, you can hit report, it'll create a PDF. You can save it, print it, email it, do whatever you want with that PDF. The contact information, pretty basic, but please, we beg you, provide multiple contacts, at least 2 for your business. I cannot tell you how many times we have had to basically not award a credit to a company because we weren't able to reach them and they weren't able to answer our questions, or in some cases we couldn't reach someone to actually sign the contract under the deadlines that we have. Things happen. You go on vacation, you're out of the country, there's a family emergency. Please have at least someone else that's probably not related to you that can be available to answer questions or to sign a contract if we need to get a hold of them in a timely manner. Business information, where are you located, what's your address, what's your business structure, are you an S Corp, a C Corp, an LLC, a sole proprietor, where are you incorporated. And again, you see here the save and complete button, so save would mark this section yellow in progress, complete would mark it green, complete. The proposed project section. That little box at the top that says, project summary, 7,000 characters. 7,000 characters is about 2 pages in a word processor. So the box gets bigger. This is your opportunity to really sell us on why your company deserves a credit. When you're competing with all the other businesses, why should we give you a credit? What are we looking for here? Tell us about your business. What do you do? What are your products or services? Who are your customers? Why do you need a tax credit in order to be able to grow? And not just a tax credit, but you decided how much credit you were going to ask for, $20,000, $100,000, $1 million, $10 million. Why did you pick that number? We get it. When you're trying to decide as a business whether or not to grow, it's like putting pieces of a puzzle together, right? Whether it's the board or the CEO or the CFO sitting, they're there, they're crunching the numbers, they're doing the math saying, if I can get to this level, we're going to be able to take this company up by X% over the next 5 years, right? How does CalCompetes play a role in that? And we're hoping that it won't be an answer like, well, why did you ask for 50,000? Well, more than 0, less than 100. In the case of widget manufacturing, when you look at their equipment again, look at their contract, when we get to that slide again, you'll see they asked for $124,000. $124,000. Well, $120,000. Why did they ask for $120,000 credit? That's $24,000 a year. That generates the equivalent of $2,000 a month in cash flow starting in 2018 when they claim their $24,000 credit for their 2017 return. And that's about half of what they anticipate paying on the monthly payments on the equipment that they're going to be financing. That's why they requested that amount. And you get it. It's like, okay, you can't hire employees until you buy the equipment for them to work on. Well, you buy the equipment, you hire the employees, you're losing money before you make money. This is going to help them to stay in the black enough during that transition period. And so they would write up a really good project narrative explaining why they specifically requested $120,000 over the next 5 years. The most entertaining project description I've had, and I've been with GO-Biz and CalCompetes since I started with GO-Biz 2 days before CalCompetes launched. The best project description I got was need to buy a where, W-H-E-R-E, house. So to this day, I'm still not sure if they were building a warehouse or they were building a house and weren't sure where they were building it. No information about the company, what they do, no website. The phone number and email never got answered. Tried to get clarification on the warehouse, couldn't get it. So a little more detail than that. So somewhere between building a warehouse and you've got 2 pages to help sell us on your company and your project. Then you'll see here, these are the boxes that you would check about the absent award of the credit. You might lay off employees or you might move to another state that automatically move you into phase 2. And then also we have the high unemployment and high poverty question here that can also move you into phase 2. So this is in the first part of the proposed project section. At the end of the proposed project section, this is where you enter in the amount of credit you're requesting. And just please remember, it's the 5-year credit amount that you're requesting. So if you want $20,000 a year, and for the 5 years of the agreement, you should request $100,000, not $20,000. Project locations, let us know what's, the addresses or at least the city or the county where the project's going to take place. The more specific, the better, but we get it. If you're looking at buying property somewhere in Kern County over the next 5 years, you're not going to be able to tell us what city it's going to be in, so you could just say Kern County. But if you do know the address, great. The more specificity, the better. The employee section, I'm not going to go over in detail now. That's what we're going to do on our webinar. But I just want to point out that the first half of the employee section asks headcount questions. How many full-time employees do you have right now? How many full-time employees are you going to hire this year? How many are you going to hire next year? How many are you going to hire the year after that? And what will the minimum and average wage be for those new full-time employees? Pretty straight, basic numbers. The second half of the questions in the employee section, this is where we get into the annual full-time equivalent calculation. So the questions are designed to help you account for your full-time employees that worked or will work a partial year versus your full-time employees that are expected to be employed for the entire year. So just pay attention to the wording there where hired versus employed. Hired means you hired someone new. Employed means they were on your payroll or expect to be on your payroll, whether they're continuing employees or new employees. The investment section, we have a link there again to our regulations if you want to look up the specific definition of the investments and see if your proposed investment would qualify. You can also call us if you're not sure, but you list out the investments that you're going to be making over the next 5 years. Ownership, list anyone who owns anyone or any entity that owns 25% or more of the applying business. What other incentives and programs are you taking advantage of? The litigation and violations section. This is not a disqualifying section. I refer to this as the help us to help you section of the application. If you're doing business in the United States in the 21st century, you probably at some point will have some regulatory violation or be involved in some form of litigation. This does not disqualify you from CalCompetes. It's part of doing business in this era, right? But imagine we're at our public committee meeting and someone comes up to make a public comment and says, yes, I would like to make public comment about the tan suit, red shirt company. And they're a horrible company. Did you know they've been sued 5 times in the last 5 years for unsafe working conditions? And the committee looks at us and, so GO-Biz, what do you know about this? And we sort of shrug, smile awkwardly. You can see where that might not bode well for that agreement. As opposed to, the company has told us that they have a disgruntled former employee who keeps filing lawsuits year after year. They keep getting thrown out. and we're able to say, yes, it's a disgruntled former employee that just made the public comment who's been filing lawsuits every year for the last 5 years. Everyone has been thrown out, and the last time they were held in contempt for filing frivolous lawsuits. We recommend approval of this agreement. You can see how that's going to have a very different resolution, right? So please help us to help you to be aware of this. Now, we also want to know if there's some significant litigation or a major violation out there that's going to threaten your company's ability to achieve its proposed goals, or maybe even the existence of the company. We'd also like to know that, because as stewards of your tax dollars, we don't want to give tax credit to a company that might not be here in a year or two from now, not when we can give it to a company that could really take advantage of that credit and use it to grow in the state. Consultant questions. If you're paying a consultant to work on the application with you, please let us know the nature of your agreement and how much you're paying them. So at this point, the applicant has finished the application. Everything's green. You see the submit button is lit up. They click submit. They read the government Ds. They say, yes, I agree. They hit submit, and they get an email saying, success. You have successfully submitted your application. And then the fun begins for us, because now we get to review the hundreds of applications that are coming in. It is always a competitive process. In the last application period, for example, we had roughly 267 companies request over $250 million in credit, and we had $67 million available. So we are always oversubscribed, especially for the non-small business pool. So the question then becomes, okay, well, what do I do to make my application as competitive as possible? Well, I talked about the proposed project, the job growth. You can see here in widget manufacturing, based on their application, and this is something we go in really good detail on the webinars, their ratio was a 0.1256, about a 12.5%, based on aggregate employee compensation of $780,000, investments of $175,000, and their $120,000 credit requests. Well, gosh, Scott, is a 12.5% ratio good? It depends. But on our FAQ document, our frequently asked questions document online, we list the ratios for every application period that we've had since this program started 3.5 years ago. These are the last 4. So widgets a small business, a 12.5 is less than 17, less than 21. They would have automatically moved into phase 2. They were great. The 3rd and 4th application periods, there was no small business cutoff ratio because we did not receive 150% of small business credit requests in those periods. So every small business that applied moved into phase 2, regardless of their ratio. That doesn't mean they were all awarded a credit. They weren't, but they all moved into the 2nd phase of the application. Now, if they had been a non-small business, you look at the last application period of the 2015-16 tax year, widgets ratio was 12.56. The cutoff ratio was a 12.42%. They wouldn't have made it. They would have just missed. And then the next 3 application periods, 4.7, 6.8, 3.8, they're 12.5, way out. They would not have moved into phase 2 unless they'd indicated that absent award of the credit, they might lay off employees, or they'd be moving out of state, or the project wouldn't happen in California, or if they're in a high poverty or in high unemployment area, in that case, regardless of the ratio, they'd move to phase 2. But you're probably looking at this going, well, Scott, the ratio is all over the place. What am I supposed to ask for? The answer is actually kind of simple. Ask for the amount of credit that you need to make your project work. Why would you ask for less money than you need if it's not going to be enough and it's not going to make your project work? And don't ask for more money thinking that you're going to get reduced, because if you ask for more credit than you actually need, there might be a more competitive application coming in behind you. Ask for the amount that you need. If you're not successful, reapply again in January or again in March, right? So ask for the amount of credit that you need, and then write up your application and make the case for why you really need it. So this, again, is the example of the contract that the company signed. I went over this a little bit ago. And with that, I would say that, again, the application opens on July 21st at July 24th, Monday, July 24th, at calcompetes.ca.gov. If you need help, you can email us at calcompetes@gov.ca.gov, or call us at 916-322-4051. Operators really are standing by. If you call, you have a 1 in 7 chance of getting me on the phone or a member of my staff. In the 3.5 years that this program's been up and running, and I've been with it the entire time, we've returned every phone call and every email within 1 business day. That is our ongoing commitment to you. If you need help, if we don't answer the phone right away, if we don't respond to your email right away, within 1 business day, we will get back to you and do the best that we can. We can even pull up your online application while you're in it and go over it with you. I mean, we may not be able to go at question by question, but if you have a specific question, we can look at it and help you figure out with the technical assistance what it is that you need to do. And again, the business.ca.gov website has this presentation, the frequently asked questions, the application guide with screenshots on how to fill out each section, the awardee list with all 775 agreements. So again, on behalf of the Governor's Office of Business and Economic Development, I want to thank all of you for taking the time out of your busy day. Thank you so much to Owens Valley for being such great hosts and making your facility available, the SBDC and all of our hosts for bringing us together. And thank you, and I hope you survive the heat, and I look forward to the fall. Are there any questions? Yes, sir.
So the story about Tesla, I was wondering, so does it count as a project when, they said their goal was hire, what, 500 employees, you said?
5,000.
5,000?
5,000.
So did it count as a project, or did it meet some of that requirement when they bought Solar City?
No.
And merged with them?
Great question. So the question is, if a company acquires another business, does that count to helping them achieve their employment goals? If they acquire another business, and that business already has existing California employees, those aren't new jobs to California. The only thing that changed was the logo on the top left corner of the paycheck, right? That doesn't count as new jobs in California, and therefore it wouldn't count for achieving the milestones. Great question. Yes, sir.
How does the CalCompete program apply for like nonprofits, 501c3s or 7s?
Short answer, it doesn't, with one caveat, because it's an income tax credit. You have to actually pay income taxes, which most nonprofits don't, unless you have unrelated business income, UBI, in which case you could offset the taxes related as they pertain to the UBI. But otherwise, unless a company pays taxes and files a tax return, yeah, but obviously on a 990, there's nowhere to pay money or to take money in. Right. We had one over here, then you.
So what about if, as far as creation of full-time jobs, if an employer's looking at, I'll either hire part-time, or I'm willing to raise part-time to full-time, how does that look at?
So part-time employees are basically invisible in CalCompetes. They don't count. The only question we do ask you is, at one of the employee section questions is any of the proposed net increase of full-time jobs a result of conversion of part-time to full-time employees? So if the answer is yes, we're going to have a conversation with you in phase 2. It's like, hey, talk to us about this. Because if it's, hey, we've got 20 part-time employees and we're going to convert them to 10 full-time employees, we might want to look at that and have a conversation, because it's basically putting 10 people out of work so that 10 people can count for purposes of the credit. It's not really creating new full-time jobs. If it's but if it's you have some part-time, some full-time, it's a full-time job creation program. That's the goal. The part-time employees don't count. You could add 20, 30, 100, 1,000 part-time jobs. If they don't work at least 35 hours a week each, they don't count for purposes of the program. Okay. Yes, ma'am.
My first question is, do businesses either receive all or nothing?
So the question is, do businesses receive all or nothing? So yes and no. If you look at each year on the, so I'm back to the widget manufacturing slide number 64. You have to achieve all the milestones for that year in order to earn the credit for that year. But you don't have to hit them all in that same year. Let's say in 2017, widget hit its milestones. 2018, it hit its milestones. But in 2019, it hired all the people. It's fine on employment, but it didn't make that additional $75,000 in investment. They don't get their credit in 2019.
But I mean, even before the contract portion, let's say I want $100,000, will there ever be a conversation where GO-Biz will say, I know we're thinking more likely?
So yes, it's not our preference, but if we are at a point where, say, the amount of credit being requested, let's say it's a great project, but the amount of credit is unrealistic or disproportionate to the growth, or in many cases, it's just a really competitive round, and it's like, hey, we'd love to give you your full request, but we don't have that available. We will have a conversation with you, but we really hope that you're going to ask for the amount of credit that you really need in order to make your project work.
And one more question.
Yes.
How long does it take for people to find out?
So the July application period closes August 21st, and our committee meeting will be sometime in November, so before Thanksgiving. The January application period will have an April committee meeting. The March application period will have a June committee meeting. So typically it's about a 90-day-ish window. So pretty limber. You had a follow-up.
I was going to piggyback on this question. If you converted part-time to full-time employees and replaced your part-time employees with that, would you look at that at all?
Yeah, we would want to have a conversation with you because, I mean, if you look at it, we really focus on the positions, not the people. So if you're, let's say you have 5 full-time and 5 full-time employees today, and you're going to convert your 5 part-time to full-time, and then you're going to hire 5 more part-time. The other way to portray that is we have 5 part-time and 5 full-time employees, and we're adding 5 more full-time positions to our company. Right? It's the same thing. There's still 5 new full-time jobs in California and no reduction in your part-time employment. Okay. Going once, going twice. I will stick around for a couple more minutes if anyone has something they didn't want to ask in front of the public. But again, my name's Scott with the Governor's Office of Business and Economic Development. I'm with the state and I'm here to help. So you weren't so, hey, you didn't laugh. All right, thanks guys.